For decades, the United States has relied on one primary source to keep its energy supply consistent: Canadian oil. It's plentiful, dependable, and always there when America needs it. But now, all of that could be on the verge of a dramatic change. Canada is making a move that hardly anyone anticipated, a decision that could put America's energy security in jeopardy, push gas prices through the roof, and spark an economic emergency, unlike anything we've witnessed before. How did things reach this boiling point, and is there any off-ramp before it all blows up? Let's walk through the details. This situation didn't come out of nowhere. It's been simmering for months. It all started when the United States rolled out hefty tariffs on important Canadian exports: steel, aluminum, and even car parts. The message from Washington was loud and clear. We're putting the U.S. first, no matter how it impacts our closest neighbor. Naturally, Canada wasn't going to just sit there and take it. Now the Canadian government is threatening to pull the plug on its most valuable export, crude oil. And this isn't just some hollow threat. It's a serious economic gut punch aimed straight at the U.S. If Canada makes good on its warning, the fallout will be huge, fast, and impossible to miss. What most Americans don't realize is just how much their country leans on Canadian oil. First of all, Canada accounts for a whopping 60% of the crude oil the U.S. brings in, way more than the Middle East, Latin America, or anywhere else. Second, a lot of American refineries are specifically set up to handle Canada's heavier kind of crude, which means finding a substitute isn't a simple matter. Third, unlike oil from OPEC members, Canadian oil has always been cheaper, more reliable, and free of major geopolitical headaches. So when Canada threatens to shut down the flow, we're not talking about a small issue. This is an energy crisis waiting to blow up, and the U.S. is far from ready. If Canada goes through with it, the hit to the U.S. economy will be immediate and punishing. Gas prices could leap overnight, and refineries across the country that count on Canadian crude will be in serious trouble. The shockwaves would ripple through transportation, manufacturing, and supply chains everywhere. For years, American leaders bet on the idea that Canada needed the U.S. more than the other way around. They figured Canada had no choice but to funnel its oil south. But now, that assumption is coming apart, mainly because Canada isn't short on alternatives. New trade partnerships with Asia and Europe are already on the table. If the U.S. doubles down on these tariffs, it may wake up one day to find that Canada has moved on, and that Canadian oil isn't headed south anymore. At first glance, cutting off the U.S. might look like a risky move for Canada, but is it really? Over the years, Canada has had to sell its oil at discounted rates because its pipelines and infrastructure were built primarily to ship crude to the States. Now, with global demand trending upward, Canada sees an opportunity to pivot and sell to growing markets in Asia and Europe. Not only could Canada earn more per barrel, but it could also free itself from depending so heavily on American buyers. In other words, this isn't just a backlash. It's a calculated shift in strategy. Losing Canadian oil isn't like losing just any old supply. It's losing the main pillar of America's energy safety net. Some people might say, no problem, the U.S. can just produce more of its own oil. Unfortunately, it's not that simple. American oil production is already close to its maximum capacity, and expanding it isn't an overnight task. It could take months or even years. On top of that, most U.S. oil is light crude, whereas the refineries we have are built around heavy crude from Canada. Changing those refineries to handle a completely different type of oil is both expensive and time-consuming. As for turning to other suppliers, that doesn't really solve the problem either. OPEC countries are already stretched thin, trying to satisfy global demand. Venezuela's oil sector is in disarray after years of mismanagement and heavy sanctions. Saudi Arabia might be able to produce more, but shifting entire supply routes doesn't happen with the snap of a finger. It could take months or years to hammer out new deals and build the logistics. What about America's strategic oil reserves? They're not the robust safety net they once were. The U.S. has tapped heavily into its Strategic Petroleum Reserve, SPR, in the past to tackle price spikes, and those reserves have been significantly depleted. Even if the government taps into what's left, those stockpiles can only serve as a temporary band-aid. After a while, they'll run low, cranking America's vulnerability up another notch. The bottom line here is that there's no quick fix. If Canada turns off the tap, the U.S. will be forced to take drastic steps, all with the global spotlight watching closely. This isn't just an energy shortfall. It's a political crisis that could rattle Washington to its core. The White House is in a scramble, trying to piece together a diplomatic fix, but Canada is holding its ground while American voters grow more frustrated by the day. Gas prices are climbing already, and it seems like there's no ceiling in sight. Over on Capitol Hill, lawmakers are pointing fingers at each other, blaming their counterparts for allowing U.S.-Canada relations to go downhill. Some are calling for an immediate rollback of those tariffs in hopes of cooling tensions, while others argue the U.S. needs to stand firm, even if it means more economic pain. Energy experts warn that the longer this standoff continues, the less likely it is that things will go back to the way they were. Uncertainty is crushing business confidence and shaking up global markets. And with an election cycle on the horizon, the timing could not be worse for American politicians. Voters are outraged, gas bills are spiking, and the pressure is mounting by the hour. So can the U.S. pivot to avoid a full-blown meltdown? That's the question everyone's asking. If the U.S. decides to scale back tariffs, maybe that's enough of a peace offering to keep Canadian oil flowing. But would Washington be willing to eat some humble pie and back down? If the U.S. stands its ground, Canada might cut ties for good, leaving a void that won't be easy or cheap to fill. Time is running short, and every passing day nudges us closer to a point where there's no turning back. This isn't just a squabble between neighbors, it's a ticking time bomb that threatens the global economy, too. Oil markets are already jittery. Just the hint of losing Canada's supply has sent prices on a roller coaster, sending shockwaves through the energy sector. If that supply is actually cut, brace yourself for a surge of panic across the board. Europe is keeping a wary eye on all of this. It's already dealing with energy shortfalls and certainly doesn't need another oil fiasco. If Canadian oil stops going south and instead heads to Europe, demand and prices could shoot up even higher. Meanwhile, places like China and India, both reliant on stable energy sources to drive their growth, could quickly lock in deals, further tightening the market. So this isn't just America's headache anymore. The longer the standoff drags on, the deeper it cuts worldwide. Investors, for their part, are betting on turmoil. The moment word of this conflict got out, oil futures took off, with traders hustling to profit from the constant state of flux. Every scrap of news shakes the markets, pushing prices even higher. Governments are glued to the updates, and central banks are bracing for economic fallout because a big oil shock could throw global markets off kilter. And here's the truly unnerving part. Even the looming possibility of a cutoff has the power to do serious damage in the long run. If Canada really does switch off the flow, expect an all-out panic. So how will this saga wrap up? We can imagine three main scenarios. 1. Canada fully follows through and halts every barrel of oil heading to the U.S. If that happens, the U.S. will be left scrambling for new sources, and gas prices around the planet will likely spike. 2. At the 11th hour, both sides strike a deal. Maybe the U.S. offers some sort of trade compromise that convinces Canada to keep the pipelines open. But will Canada even go for it? And if so, what will the U.S. have to give up? 3. The conflict ramps up into a full-scale trade war, where both the U.S. and Canada refuse to back down, sending global markets into a tailspin for the foreseeable future. At the moment, nobody's sure which way it'll go, but one thing's beyond doubt. The U.S. is already knee-deep in an energy emergency. Where do we go from here? Will Canada pull the trigger and stop the flow? Will the U.S. retaliate? Or are we teetering on the edge of a worldwide oil catastrophe? Stay tuned, because this drama is just heating up.